In today's video, I'm going to talk about Japan and a way that you can actually buy into Japan and have a diversified portfolio to manage some of that risk. How we can do that, we can talk about the Vanguard Japan ETF. But before we get to there, what has been going on within the Japanese stock markets? If we have a quick look at the Nikkei, looking at great growth over this year, and we're up about 26% so far. If we take that back to 1991, as we can see on this chart, we can see that we are up about 35%. Those of you who have followed Japan will know that they went through a lost decade, potentially a lost couple of decades. So we take it from 2008 after the financial crash, you are looking at an over 300% increase in the Nikkei. And actually, in reality, if we even have a look at that from COVID until today, that is a 100% increase. So you have doubled your money in that time period. Is there still some growth? There potentially is. You have seen quite strong earnings coming in for the first quarter, with some of the big companies in Japan reporting great earnings. Companies like Honda moving up almost 6% on the back of theirs. Toyota also up about 1.5%. Big winners in this market were the mining companies, where they were the strongest performing sector, and they were up about 15%. Sony dropped, and Olympus also tanked as well after the medical equipment maker posted nearly 50% drop in their first quarter's operating profit. But let's go and have a quick look at what we could buy from Vanguard. They do a FTSE Japan ETF under the ticker symbol VJPN. Very original. Vanguard Japan. Yeah. This is basically an ETF made up of 515 stocks. If you were to be buying it today, you'd be paying about £25.65. And it's got quite a nice little ongoing charge in there at 0.15%. As I always say, it's got a risk 6 out of 7. Let's have a quick look at what the objective of this ETF is. It is basically, once again, passive management indexing against the FTSE Japan index, and comprised of medium and large size companies in Japan. What's performance look like? A bit up and down. And I suppose this is where Japan has been over the past couple of decades, but potentially looking at some quite strong growth coming forwards. With coming out of COVID, you had a nice increase of about 25%, a drop last year. Everybody basically tanked last year, but good steady growth so far over the last year, with about 15% increase taking place. Let's have a quick look and see where the regional exposure is. So within that Pacific region, it then drills down into 100% into Japan. What are we looking at on the weighted exposure across those different sectors? We're looking top 3 being industrials, consumer discretionary, and technology. Coming in very closely behind that, we also have the financials. We have a quick look at which companies we're actually looking to invest into. Some of those big names that we will know, the Toyotas, the Sonys, also into Mitsubishi on the financial, as well as Mitsubishi Core and Hitachi. This does pay a small dividend, something similar to the VUSA side of things, coming in at 1.88%, and this pays quarterly, and it comes in on the same kind of timescale as all the other Vanguard ETFs, looking at that March, June, September and December payments. And it's going to cost you 0.15 of an ongoing charge to hold this ETF. And then on top of that, you also have that platform charge of 0.15%. So reasonably economical to hold this one. And there really are potential for some serious growth within the Japanese market. The main driver behind the growth this year to date has been those large companies in the Nikkei. Potentially that growth comes in from those underlying sort of second tier type of companies. And they, very similar to the FTSE 250 could be the real ones that give you that extra bit of growth. Go away, do some due diligence and have a look and see whether the Japanese market is something that you want to invest into. But why don't you go and have a look at this one, which talks about a wider set, the emerging markets, so also bringing in China and India into the mix as well. Thanks very much for watching, and I will see you in the next one. Cheers, bye.